Opendoor Technologies Inc., NASDAQ Open, is trading at a live intraday price of $9.61, marking an astonishing increase of over 64% for the day. This explosive move has been nothing short of a spectacle, with trading volume reaching nearly 500,000,000 shares, a level of activity that far surpasses its typical daily average. While many investors are likely celebrating this monumental surge and assuming it's a simple function of renewed housing market optimism, the reality is far more complex and rooted in a dramatic leadership shakeup. The stock's true catalyst isn't just the macroeconomic environment, it's a high-stakes corporate drama that has captivated a new and powerful breed of investors. The company's co-founders, including the influential Keith Rabois, are rejoining the board, and a new CEO, Kaz Nejatian from Shopify, has been tapped to lead. This is not just a change in leadership, it's a change in the entire investment narrative, transforming the company from a struggling iBuyer into a potential tech turnaround story. This unexpected development is the key to understanding today's price action, and it's something few had on their radar. The common expectation for Opendoor has long been tied to the prevailing winds of the housing market. For months, the narrative was one of a company battered by high mortgage rates and a sluggish real estate cycle. The stock has been a poster child for volatility, at times scraping a 52-week low of $0.51 just a few months ago, only to rally violently in what has felt like a meme stock-fueled frenzy. Many analysts still maintain a very cautious stance, with price targets often sitting below the current price, a testament to the deep-seated skepticism about the company's ability to be profitable in this macroeconomic climate. The prevailing belief is that Opendoor's business model is inherently flawed, or at the very least, overly capital-intensive and susceptible to market downturns. The reality, however, is that today's move is a powerful challenge to that very narrative. It suggests that a significant segment of the market, both retail traders and crucially institutional players, sees a future for Opendoor that isn't solely dependent on a booming housing market. The influx of smart money, including a recent $41 million private stock offering to Khosla Ventures, indicates that there are those who believe the new leadership and a strategic pivot towards an AI-driven, platform-based approach could fundamentally change the company's fortunes. This isn't just about homes, it's about a tech-centric, data-driven transformation. Breaking down the recent stock movement, the sheer volume is the most telling factor. With hundreds of millions of shares changing hands, this is a clear sign that a battle is underway between those who have been betting against the company and a new wave of buyers. The shorts, who have profited from Opendoor's decline, are being squeezed hard as the stock climbs relentlessly. This is creating a powerful feedback loop where short covering adds to the buying pressure, propelling the price even higher. This dynamic is reminiscent of the kind of retail-driven rallies we've seen with other tickers like GameStop, but in Opendoor's case, it's underpinned by significant, verifiable corporate developments. The news of the CEO change and the return of co-founders has provided the fundamental justification that was previously lacking, giving conviction to both the online investment communities and larger funds. This institutional interest, combined with a strong retail following that's found a new meme stock to champion, is a potent combination. While many retail investors may be using platforms like Robinhood for this individual brokerage play, it's clear the movement is far larger than just one investing site. It's a cross-platform phenomenon, seen everywhere from Fidelity to Interactive Brokers, with traders on all of these platforms seeing the immense volatility as an opportunity, regardless of the underlying fundamentals. To understand Opendoor's business model, one must look at the concept of iBuying, or instant buying. The company's core operation involves using technology and data to make instant, no-obligation cash offers on homes. Once the offer is accepted, Opendoor purchases the property, performs any necessary light renovations, and then resells it, ideally for a profit. The value proposition for sellers is speed, convenience, and certainty, sidestepping the traditional, often stressful process of listing a home on the open market. This model, while elegant in theory, is incredibly capital-intensive and sensitive to housing market fluctuations. When home prices were soaring, Opendoor thrived, but when the market stalled, the company was left holding a costly inventory of depreciating assets. This is where the company's recent strategic shift comes into play. Reports indicate a pivot toward the more capital-light model, with offerings like Cash Plus, which provides sellers with a cash-backed offer while allowing them to simultaneously list with a traditional agent. This move is designed to reduce the company's balance sheet risk and move towards a more sustainable and hopefully profitable business model. The new management team is expected to accelerate this transformation with a strong focus on AI integration to improve pricing models and operational efficiency. The mention of AI is likely a major driver of the recent excitement, given the massive gains seen in other companies like Nvidia stock and Tesla stock, which have successfully leveraged AI narratives to their advantage. The market is betting that Opendoor can do the same, proving that technology can be the solution to the housing market's ancient problems.
Looking ahead, the future of Opendoor is a high-stakes bet on several key factors. First, the housing market remains the elephant in the room. While there are whispers of potential interest rate cuts from the Federal Reserve, which will be a significant tailwind for the real estate sector and for Opendoor's business model, this is far from a certainty. A potential government declaration of a housing emergency or targeted stimulus could also provide a massive boost, but these are speculative scenarios. The new management team has a monumental task ahead of them, executing on their strategic pivot towards a more diversified and capital-efficient platform. Can they successfully implement AI to enhance their core operations, as some analysts suggest, and move beyond the volatility of the iBuying model? The success of this pivot will be the ultimate test of the investment thesis. If the new team can demonstrate a clear path to profitability, the stock could have significant upside. However, if they fail to deliver, the stock could just as easily give back a large portion of its recent gains. This is a classic high-risk, high-reward scenario, and investors should be aware of the inherent volatility. For anyone considering their own investment strategies, whether they're using a Schwab Intelligent Portfolios or handling their own trades via the Fidelity mobile app, this stock represents a compelling case study in the tension between market sentiment and fundamental reality. Comment below with your thoughts on Opendoor's new CEO and whether you think the AI-focused pivot can truly turn the company around. In summary, the expectation surrounding Opendoor was a company languishing in a tough housing market, a volatile ticker prone to swings but with no clear path to profitability. The reality, however, is that a dramatic leadership change and a significant strategic pivot have completely rewritten the narrative. The immense live stock price surge and massive volume today aren't just a sign of a recovering market, they are a direct response to the market's belief that new management and a focus on technology can unlock a fundamentally different and more valuable future for the company. The tension between the old bearish narrative and this new bullish one is what is driving this immense engagement. It is a powerful reminder that in the world of online investing, a company's story can be just as important as its financials, especially when that story provides a compelling reason to believe that a new reality is on the horizon. The journey for Opendoor will be a fascinating one to watch as the new leadership attempts to transform this high-risk iBuyer into a durable and profitable technology platform.